What's up everyone, my name's David. Welcome back to my channel. Hope everyone's doing well today. If you haven't heard or you've been living under a rock, Joe Biden has been elected as the next president of the United States, or POTUS. And as a disclaimer, I know we have different opinions and philosophies, but this is time for us to get together and unite and make money. Yes, make money. I know there's a lot of chaotic stuff and there's a lot of events that are happening right now, but switching to a new president with their new policies and new stances is a great way for us to reevaluate our investments and our positions that we have in the market. So let's talk about some of the differences with the new administration and their policies versus the current administration and their policies. But first, if you already haven't done so, please like the video and subscribe to my channel. It really helps with the content I create and sharing the information. All right, let's get back to it. The first major difference is taxes. So there's different types of taxes, but we're going to focus on the corporate tax and income tax. For reference, corporate tax is the tax that corporations pay in relation to their net income along with a tax percentage. The same can be said with income tax, but at the individual level. Right now, taxes in general are at a historical low. In particular with corporate tax, right now it's at 21%. The new corporate tax is roughly at 28% according to what the proposal that Joe Biden has given out. Typically what this means is that corporations won't have additional capital or money to fund for projects, R&D, anything that they wanted to invest into the company. Usually the stock market acts negatively because they think that companies and corporations won't have excess capital to reinvest for new projects and for growth. Now, higher taxes isn't always bad. The thought is that the government can redistribute the wealth towards the middle class for them to spend to stimulate the economy. It's a trickle-up effect where we're empowering the individuals versus a trickle-down effect where we're empowering businesses and other entities. Next, or the second major difference in the policy is that the newly elected president wants to be more progressive in terms of green solutions or renewable energy. That includes wind, solar, and other clean energy solutions. I think overall, the majority of people generally want to have a cleaner solution with less dependencies with fossil fuel, but it does come with a cost. Joe Biden's plan is to spend roughly $1.7 trillion over the course of 10 years. Keep in mind that it's very time and capital intensive, but there's already companies in this industry that's already positioned to do well. And the last policy difference is international policy. So we're experiencing trade wars and tariffs. Overall, with Joe Biden's new plan, it's going to be a little more open, although relatively strict. But it's going to be a more open environment than our current administration. So there's going to be a lot of things in terms of international presence where the United States corporations, they can have more flexibility and more presence in terms of their operation. Now that we talked about the major differences between the policies, let's talk about the 3 stocks that I recommend you invest into. The first stock is Tesla. If you don't already know, Tesla is a manufacturer for electrical vehicles or EVs. The general public thinks of Tesla as a manufacturer for just automobiles or cars, but ultimately they're a tech company. So just think of Tesla as a tech company, but then they also have a car aspect or car twist. The key differentiator which separates Teslas from other electrical vehicle makers is that they have tremendous software and their tech and engineers are one of the best within the industry. For example, when you think of autonomous cars or cars that drive themselves, in the United States, you probably first think of Tesla. And along with developing sophisticated software along with cars, they're growing in a rapid rate in terms of demand. With the growing demand domestically and internationally, they're going to try and ramp up their production. So some of the things that they're trying to do is increase their output. So right now there's talks and development in terms of creating factories. Currently, there's a factory being built in Germany, along with recent news that were announced that there's going to be a new factory based in Austin, Texas. With all this increase in demand, it's helping them with their financials along with their profits. Tesla has seen growth year over year along with quarter to quarter, even with this pandemic that's happening right now. Also, I want to preface that Tesla recently had a stock split, so overall it may look inexpensive, but I want to caution that you may hold off a little bit in terms of waiting to see if the stock itself can go a little lower, because right now I think it's a little overpriced, but it's still a solid investment to make right now. And by chance, if you're anxious or antsy enough to try to invest in Tesla right now, listen to this next stock tip and it'll help you relax. Stock number 2, Canopy Growth. Canopy Growth is a green company. By green, I don't mean money, I mean this type of green. Yes, Canopy Growth is in the business of marijuana, and particularly medicinal marijuana. The company was founded and headquarters in Canada. This company is based and operates in Canada, and they offer different products such as oils, concentrates, soft gels, and hemps. And you're right, marijuana is illegal federally, but it's a little more complex than that. Some states have different regulations and rules. For example, New Jersey just legalized the recreational use of marijuana with this past election. With this new administration, there's going to be a lot of changes along with new policies, and one that's being proposed by the newly elected Vice President Kamala Harris. She's proposing that there's going to be some legalization of marijuana. For example, Kamala Harris proposed an act to legalize marijuana at a federal level to expunge and remove any offenses that were previously made by millions of people in the United States. There's a lot of conditions and red tapes for Canopy Growth to enter into the US market, but I'm a firm believer of this next administration that's coming up in terms of the progress that are made, in terms of any progressive movement. Overall, if you want to take some risks with your investments, I think you should look into investing into Canopy Growth. I think there's a lot of chance that they can enter into the market, but if they don't enter the US market, I think they'll do regardless well. So I know a lot of people don't know about Canopy Growth, but I know a lot of people know this next stock. The third stock is Starbucks. Now I know there's probably a few people out there watching this and thinking, oh, terrible, or
wow, $10 for a cup of coffee.
When I'm talking about Starbucks, I'm not talking about the quality of the coffee or the prices. So I'm just talking about how they deal with their operations and in terms of investments. In the United States alone, there's over 14,000 locations. The major strategy and tactic is just to gain square footage for more presence and more foot traffic in these areas. And they already created a following in terms of their customers and creating loyalty. So overall, the brand itself is going to be supportive of the company along with the product. The Starbucks leadership and executive teams are trying to mimic this process along overseas. The leaders at Starbucks are trying to be aggressive in terms of their international expansions within China, which that means that every 15 hours, they're trying to open a new Starbucks location within China. And if you kept up with any international news, China's economy in terms of its size is growing along with its middle class. So what the team at Starbucks is trying to do is trying to get an early market penetration into the economy before it grows and becomes oversaturated. So they're trying to basically mimic the success that they have in the United States with China. Also, besides expanding into China, along with increasing the number of locations, they're good with technology in terms of using their mobile app, in terms of incorporating an ease of ordering along with the convenience. On top of that, they're expanding their product line and their services, so they're going into the breakfast market. So overall, there are a lot of things in terms of what they're doing in terms of innovation and increasing their presence that's really good in terms of their long-term projection. To sum it up, the three stocks that I recommend you invest into under a Biden presidency is Tesla, Canopy Growth, and Starbucks. Thank you again for watching my video. Feel free to like the video along with subscribe to my channel. And comment down below what are your thoughts on my stock picks along with any recommendations that you have. As always, stay fresh, stay awesome, take care.